Great. Hi, Adam. How are you?
Hey there, Dale. Doing pretty well.
Hey,
Glad to
buddy.
be here.
So Draghi did it again. It's kind of like Groundhog Day. The question I have for you is, he did the same thing last month. Euro weakness only lasted another 24 hours. Do you think that his statement today is going to have more staying power, or for right now, I'm viewing this pop in the dollar index towards 96, 96.20 as a potential dollar shorting opportunity. Where's your head at? I know it's probably in Panama because you're going to be taking a vacation there shortly, but what about the dollar and the euro here, Adam?
Yeah, well, three things. Number one, he put a timeline on it. He said December. We're going to talk about it in December. That's when they have their new forecast. So you're fighting a little bit of a timeline. You say, hey, that's number one. And he was very vague about it, about doing more. And number two, he put a deposit rate cut on the table. So the ECB had said before that it was really at the lower bound. They went to negative rates. But negative rates was really an experiment. They were the first one to do it. I guess they've determined now that the experiment was successful, so they can go to round two. And part three, initial jobless claims in the U.S. were strong. This a bit of the story today is U.S. dollar strength to go along with it.
Okay.
It's all adding up to pretty 140 pips or so in the euro now.
Yeah, so does this give you encouragement that perhaps we're on our way, the bull market and the dollar continues? I'm not looking for a dollar crash, Adam. I'm just thinking that the way the dollar acted last week with risk assets being very strong, S&P, the dollar weakened during that same period. To me, that was different action than I'd seen for a while, thinking it's a market tell. And if the dollar can't do well with the S&P is recovering above the 2000 range, what happens if this is a failing rally in the S&Ps and we start to head down again? I would think that would be dollar negative.
Yeah, it doesn't look so great for the U.S. dollar. It comes down to data. I mean, we turned around, we bottomed out at this time last week, or about an hour before this. Initial jobs claims were a bit better. The CPI was a bit stronger, and the dollar's had a bit more of a bid since then. And it would come off on dollar yen and started to bottom around then. Then at the same time, I think the crosses are more important. A lot of it's coming through there. There's the data, but then you have Japanese trade balance very soft. To talk about QE there, Europe. Talk about QE there today. Then you look at sterling, I guess, and that is more of a dollar story. Retail sales were strong today, extremely strong, and yet it's well down on the day. So you have to give the dollar some credit at this point. But I don't know if you saw the story just broke not too long ago. Was the bond auction on Tuesday? 2-year notes was canceled because of the debt limit fight.
Right.
And now there's
I brought that up. And people aren't even really talking about that right now, Adam. We're only November 4th. We still don't have a speaker. Ryan's placing all kinds of conditions. I think there's a shot for a technical default because the market's so used to us going to the brink and then solving it. I think they're too complacent about that being the case again.
But this is pretty serious stuff in the bond market. I mean, you have derivatives that trade around these auctions based on these certain dates. They're not really set up for an auction just not happening. That's only for 3.5 trading days notice to sort it out ahead of the auction on Tuesday. You see 2-year notes, they're freaking out a little bit, down to 59 basis points from 64. That's a bit of a headwind for dollar yen, and it could start to cap things here, but you get this strange thing in bonds where they're buying the bonds because on scarcity rather than worrying about a default at this point. The bond market gives the U.S. a lot of credit for eventually coming down on the side of sorting it out. Even I think if you went into technical default for a few days, now you might start to see it hit stocks, and the dollar it could go either way. I mean, you start to see some dollar strength in things against the euro, against sterling, against Canadian dollar, but you might not see it against the yen on the safe haven trades. But it throws another ball into the air, and I really right now I guess the story is the ECB and that's the trade. And I don't see a lot of support. It's a huge 34 that you start to get into some decent kind of support.
Yeah, you know, talking about credit, Adam, I'd like to credit you for a great U.S. dollar yen call after the NFP when we were breaking sharply and the euro was skyrocketing. You talked about that the BOJ was not going to let it fall beneath 1850 for then, and here we are knocking on the above the 120 level. We have BOJ coming up. What are your expectations now? We've had this pop in the end, kind of a triangle in there. I'm leaning towards yen shorts because I am in the camp that we're not going to 2200 in the S&Ps, that this may just be a kiss of a breakdown of a rising wedge, long-term wedge in the S&Ps. I still think those August lows in S&Ps and August lows in yen could be revisited. Am I crazy?
Well, I mean, the trade on the BOJ for me is that they won't do anything, and I think it's been fairly clearly signaled now. But there was this idea because last Halloween, I'm sure you remember, that it was the surprise QE, and there's a feeling that they like this element of surprise. So they've been floating out there and putting out headlines that they're not going to do anything, and I think they've been very explicit enough that I don't think they're joking around. So there probably is some idea that they'll do more, and that would have pushed dollar yen higher, and I think you get some selling when they come out, and we go back down lower to 118.50, maybe even below when they don't deliver on any kind of stimulus. It's just going to be a ho-hum meeting. That's on the 30th of October. So I like the downside there for that reason. Stocks, I mean, earnings came through. I was surprised McDonald's was strong today. I thought, I mean, it could just be on the numbers. But that, you know, you can argue ID as well. Some of the soft ones, they're individual business problems. And it's
well, that could have been it, but that could have been it at that 1830 level, and we're on our way to 2400. I think it's possible. But, you know, I'd like to switch gears with you being a Canadian. Okay. What's your thought on the election? Isn't that Trudeau's son, who's now your prime minister there? So you guys have dynasties like we do in the U.S. We had the Bushes, right?
Yeah.
And you have the Trudeaus. I believe he's very far left. What do you think is going to be the effect on a Canadian economy that's struggling because of low natural resource prices and its effect on your national currency, the loonie?
Right. I mean, in politics, it's generally a long-term story, right? So you're not going to get much beyond oil trading. I mean, he's not going to be able to do anything about the price of oil or the price of minerals. So that's not, to me, the bigger picture, though, is the main promise, or one of the main promises, was to spend more money to stimulate the economy through infrastructure spending. And that's something that the market will get behind, and that is something that's stimulative for growth. So there's some good news there in the short term for growth. Other stuff, it's not so much of a factor. I mean, he talked a little bit to the left, but it's the Liberal Party. They've governed Canada for most of the last 100 years. And so there isn't going to be some huge swing to the left, some huge spending. I mean, Canada can afford, we're just talking about $10 billion deficits, which is nothing in terms of where Canada's at. The debt load is very much under control. The budget is balanced right now. It's among the most healthy fiscal countries in the world, so there's room to spend money, and Canada's in a recession right now. So it's not the worst idea. He's to the left of the former prime minister, but it might be a little bit overstated.
Will British Columbia secede from the country over something like this? They're pretty right-wing, aren't they? They can't be happy about having a socialist for prime minister.
Yeah, Alberta, I think. Alberta's where the oil is. They all voted against. There's never really any talk. Quebec, the separatists did a little bit better here in Quebec, but that kind of talk is far out, and there's nothing to it. I mean, it comes down to oil for CAD, and we saw yesterday that oil inventory numbers were another 7 or 8 million barrels. That's 2 weeks in a row. The inventories are stratospheric in the U.S. The lows in inventories are in September every year, and they were higher than almost any other year on record in terms of total U.S. inventories. And now we're turning back up. And if we use something like last year, that's another 350 million barrels going into storage, and there's no room for it except to be dumped right onto the market. And I deeply believe that we're going back into the 30s, maybe even lower, in oil, and for Canada, that's the story. That's $1.40 in the loonie. If the U.S. especially can get back on its feet, and by back on its feet. It doesn't even need to be 2-3% growth. I mean, anything just around 2 is more than enough to get the dollar higher. Which is,
do you think that we had this big break from 34.80 to 28.30 or so, and we've recently recovered? To me, it looks like a retrace type of rally. I think there could be one more shoe to drop before crude collapses, and crude could even generate one more rally from, say, 43 level in WTI to take us back up towards that 50 range.
if you get some kind of headline to drive it, that's trading, right? It's getting the timing right, and especially in oil, when we're talking about 10. I mean, leverage trading in oil, you can't afford to eat $4 of oil going against you. So it's about getting the right levels, and you know, I like shorts, but you know, I don't love them after a pretty heavy week of selling, and we're right down.
Right.
The 55-day moving average is what held it up yesterday. That's a level in CAD as well that's holding. So that's the kind of short-term level I'm watching, and I would like to see a bounce, if only to short it, and show some discipline.
All right, Adam, thanks so much for hanging out with me for a few minutes and answering my questions, and I hope you'll still be free to give us commentary from a communist country, and really hope that your freedoms are not impinged upon. And what do you think would happen if Donald Trump becomes president and he has a meeting with Trudeau? Do you think that he'd have anything bad to say about Trudeau?
Well, the next one now, the opposition, the Conservatives, who lost now, Stephen Harper has resigned as leader. They'll need to pick a new leader. And the Doug Ford, who's Rob Ford's famous Rob Ford's brother. So if we had Trump and Ford, it'd be a real winning combination, I'm sure.
Well, and but you still have hope with the Toronto Blue Jays, buddy. Maybe they could get back. All right. If I don't talk to you, Adam, have a great vacation.
Thanks,
you deserve it. You're one of the hardest working guys. For those of you hearing me, I encourage you to go to Adam's website, Forex Live. They have a lot of great, intuitive, educational pieces there. The research is elite. And thanks again, Adam, for hanging out.
Thanks so much, Dale. Exciting day, and let's hope it keeps up the volatility.
All right, buddy. Good hunting, my trading warrior brother, Adam Button. @FX_Button. Twitter handle. All right, bro.
Cheers.
Cheers.